It will happen when the powers that be deem it appropriate. And if BlackRock really, really wants it to happen, it'll happen. Because I think they have a bigger stick. I think they do have a bigger stick than the current chairman. I mean, I think it's highly unlikely before the election, because the current guy was appointed by the current administration.
Right.
And so he's going to do what he has to do to stay. Now, if the administration were to change in November, how quickly would they replace, the SEC chairman? Probably pretty quickly.
According to recent reports, the US Securities and Exchange Commission is using the merge, the final phase of Ethereum's transition to proof-of-stake consensus, to reclassify the leading altcoin as a security. The agency has reportedly issued subpoenas to 3 well-known crypto companies asking for records about the Ethereum Foundation. According to a recent Fortune report, the investigation into the foundation could give the SEC regulatory coverage to define Ethereum as a security and possibly make it easier to deny the spot Ethereum ETF applications from BlackRock and others. The foundation has also revealed via GitHub that it may be under investigation by a state authority. This is coming amid declining sentiments that the agency will approve the spot Ethereum applications by the May 23rd deadline, as it did for the spot Bitcoin ETFs on January 10th. According to Eric Balchunas and James Seyfarth, Bloomberg ETF analysts, the chances of spot Ethereum ETF approvals are now down to 25%. In a post on X last week, Eric noted that the SEC is not as active with the ETH ETFs as it was with the Bitcoin ETFs last year. We are just 2 months from the deadline, but the agency is not meeting with the applicants or asking related questions as it did with the Bitcoin ETFs. Despite the odds piling against the ETH ETF applications, Morgan Creek Capital founder and CIO Mark Yusko believes there is still a good chance we will get the approvals. However, like the Bloomberg ETF analysts, Yusko is not particularly optimistic about the May deadline. Instead, he believes the approvals will be announced after the November elections. We will now bring you clips from Yusko's recent interview with Paul Barron. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Definitely FUD, definitely fear, uncertainty, and doubt. That is how the incumbents deal with technological innovation, right? So blockchains are the future of computing, full stop. And they're not, the technology is not going away. And I've been shilling this book, that Chris Dixon wrote, Read, Write, Own, for anybody who wants to understand why, this thing that I've been talking about for almost 10 years, about the cycle of technology, from the mainframe to the microchip, to the personal computer, to the internet, to the mobile net, and now the truth net, which is the internet of blockchains, and why AI is not it, right? AI is a tool that's been around 75 years. It ran on big computers, and it ran on personal computers, and it ran on the internet, and then it ran on the mobile net, and now eventually it'll run on blockchains. I always say it's a 75-year overnight success story. But the FUD, the fear, uncertainty, and doubt, is spread every single time there's an innovation in technology that threatens incumbents' livelihood. So you can go back to the internet, right? AT&T and Verizon tried to kill, literally, the internet because they didn't like what you and I are doing right now. Voice over internet protocol is free. They charge $3 a minute for long distance. We're far away from each other. And they liked charging $3 a minute for that. So they tried to get a bill passed, and they spread all these rumors about how the internet was bad. And thankfully, I would say, Al Gore did not invent the internet, but he did kill that bill, which stopped them from over-regulating it. And the same thing's true now. The banks are being disrupted by these chains. And financial services, as we know it, which has had a good 838-year run under its current form, based on trust, is being displaced by truth. Blockchains give you truth. And therefore, as we think about, how would you stop these chains, these innovations from happening? Well, we'll overregulate them. Well, but you don't have any jurisdiction because they're not securities. Well, then we'll classify them as securities, or we'll try to classify them as commodities and get some other regulator to collaborate, to work with us. Well, they tried that with Bitcoin. They tried to overregulate. They tried to regulate by attack on new technology and new innovation. And what happened? The courts said, Gary, you've overstepped your bounds. And now we have Bitcoin ETFs, and they're part of the culture of the future of financial services.
For sure.
So now next up is Ethereum. So that's a long-winded way of saying it's FUD, it's expected, and the reality is the courts forced the SEC and Chairman Gensler to approve the Bitcoin ETF.
Yeah.
There has been no such court ruling, no such lawsuit to force his hand on Ethereum.
Right.
Therefore, he can do all of this, FUD campaign to make people afraid that it's not going to happen. And as we all know, people will buy the rumor, whatever that rumor is, whether it's new technology adoption, whether it's new chips, whether it's new products, and then some of them will sell the news. And so you'll get this run up in price. And then if it doesn't happen, or it does happen, they'll sell out of fear. If it doesn't happen, they'll sell out of, I'm going to take my profits if it does. And we saw that after the Bitcoin ETFs, and then they went back up. And now there's been some, downside pressure. Ethereum ran along with it, got all the way up over $5,000 and, or $4,000, sorry. And now, bam, back down again.
As expected, Eric and James have been getting a lot of flack from Ethereum investors due to their pessimism about the ETF approvals. In response to an ETH investor questioning their credibility as a result of their latest comments on the ETFs, Eric wrote, "Our credibility is what drives our predictions. It isn't rooted in being a Bitcoin lover or Ethereum hater. Personally, we 100% think the SEC should approve it. It's simply wanting to get it right, which we have a decent record of. And right now, it ain't looking good. I'm sorry." In another post, Eric noted that the odds would instantly improve if the SEC's attitude changed. The post reads, "If the SEC gave comments, our odds would at least double, maybe even triple from the current 25%, depending on who or what comments. But it is hard to imagine them leaving themselves and issuers less than 2 months for comments, fixes, etc. The circumstantial evidence backing up why they may not be giving comments, but prepping denial, is also stronger here than it was with the Bitcoin ETFs." He noted further in the post that there is no lawsuit forcing the agency to approve the ETFs, and Gensler has changed his mind about Ethereum being a commodity. In his interview with Barron, Yusko points out an important part of the equation that can quickly tip the scales for the largest altcoin. BlackRock, the world's largest asset manager, is one of the applicants. In addition, BlackRock just launched its first tokenized fund on the Ethereum blockchain, and it has seeded the project with $100 million. According to Yusko, these are all signs that spot Ethereum ETFs are inevitable.
BlackRock is going to do what BlackRock is going to do.
Yeah.
They are the largest asset manager in the world. I told people for a year that there was no question in my mind. As soon as they announced they were going after the Bitcoin ETF, not only was it going to get approved, they were going to be first. Right. Now, they decided to crown them all at the same time, but and look, Bitcoin has, BlackRock has applied for an ETF in Ethereum as well. I think the challenge now is who has the bigger, stick, shall we say, everything is political. Appointments of these, unelected people are by the current administration that happens to appoint them. It happens to be an election year. Look, Ms. Warren is pretty anti all of this. Why? Well, my thesis, I won't put words in her mouth, but my thesis is you look at her largest campaign contributors, they happen to be large financial institutions that have a great deal at stake if they are disrupted. So it's not surprising to me that she would craft legislation to slow down the disruptive technology. Okay, the fact that it's an election
Always
year
an
and that
agenda.
she's show me the who said it, show me the incentive, I'll show you the outcome. That is the way the world has always worked. And here's the problem, political problem, as I see it. It costs, from what I've read and studied, about $100 million to secure a Senate seat in the United States. $100 million. Most of us don't have that. So if we want to run, unless your name is Meg Whitman, who spent $103 million or $108 million, I can't remember, of her own money.
Yeah.
She lost, unfortunately, but she spent over $100 million of her own money. Unless you're her or someone like her, you have to raise $100 million. Well, it turns out if people write you $1, $10, $20, $50 million checks, Paul, they expect something.
Yep.
And that's the way our system works in a world where you allow unlimited contributions to, PACs and super PACs. So either fix campaign finance and make people so they're not on the payroll of special interests, or do term limits like the old days, right? And when the founders the framers set it up, 2 years, you left the farm, you went, you served, and then you went back. You didn't stay for 6 or 8 or 10 or 50. You stayed for 2. And maybe 2's too short. Maybe we need 4 or 6. I don't know what the right number is, but it didn't 20, it didn't 40, and it didn't 50.
Yeah, lifetime.
And there's also
type scenarios.
It's also vitality, right? When are you the most vital? When are you the most? I hate to say it, but I watched some speeches of our current president when he was 35. I'm like, yeah, right on. I agree with you. I don't say that now.
The BlackRock US Institutional Digital Liquidity Fund unveiled on Wednesday is BlackRock's first tokenized asset fund and the asset management giant's first sojourn into real-world asset tokenization. According to BlackRock's press release, the BUIDL token is fully backed by cash, US Treasury bills, and repurchase agreements, and will provide yield paid out via blockchain rails every day to token holders. BlackRock said it will be working with Securitize, which will act as a transfer agent and tokenization platform, and BNY Mellon, which will custody the fund's assets. Other participants are Coinbase, Fireblocks, Anchorage Digital Bank, and BitGo. The tokenization of real-world assets such as bonds and funds is a rapidly developing industry that is intertwining traditional finance players like BlackRock and the digital assets industry. The industry is growing at such a rapid pace and is estimated to hit over $16 trillion by 2030. What are your thoughts on Mark Yusko's interview and Eric's tweets? Do you agree that the chances of spot Ethereum ETFs are pretty slim, especially with the deadline being just 2 months away? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.